Hello and welcome to the Core 4 Show. I am Coach Brandon Adams for another week of a journey that is worth taking. You know, the title of today's show is The Goal Wealth Has Many Paths. And so there's so many things that we can do to be successful in this world, so many ways, so many opportunities. And how do we do that? You know, and so the Core 4 journey is somewhat unique because the idea behind it is that you want four things to happen. You want to change your mindset and have a real financial oriented way of living. You know, we say for our creed, we say that you must first become a subject matter expert. Second, be the best version of yourself. And third, you must surround yourself with people who inspire you. That's what the creed is of Core 4. But as we learn, our mindset has to change. That quality of thinking, either from an educational standpoint or just from an understanding, or whatever that might look like, our motivation, that's what's going to dictate our success and how sustainable that is for long term. And then secondly, we go after 9 to 5. A 9 to 5 is kind of what we're all taught, whether we go to school every day and we go to school from 9 to 3. We're like learning how to be in this mode where we're working and we're exchanging our time for dollars. So our goal is to, in our journey, help us to expand that mindset so we can reduce our 9 to 5 and maybe do it just as a labor of love. But because we've kind of created employees, those employees then actually work for us. And so we have the Core 4 bot, which is an amazing bot that is on the Forex market that's making money daily. We also have the Kong bot. And so the Kong bot is making money daily. We also have yield farming, which is making money daily. We also have the Coinbase trader that's making money daily. And so as these things that we're putting our time and our effort in to put to work for us, at some point it could change our 9 to 5 status to where, again, it's just a labor of love. So the next idea for us with Core 4 is investments. And what do those investments look like? They could be passive or active. And we just talked about some passive plays that we could do. There's active plays where you could trade yourself. And so we learn how to do that here in terms of our education at Core 4. And then we actually have other projects that we do case studies on. And we have a guest today that we're going to be talking to about something that I think is kind of fascinating because it's in my community of training athletes. And so we love it. And so then the next part for us is retirement. How do we set ourselves up so that when we're not working and we're not looking over our shoulder, that we can make sure that we're protecting our golden years? And so that's what Core 4 is all about. And we have an amazing team of people that inspire me. We have Eric Majors, we have James Bishop, and we have Chris Pulver. And so weekly, they're here to share with us their journey and their expertise and how they follow the creed themselves. So without further ado, we're going to bring on Eric. Eric is our yield farming expert. What's up, buddy?
Hey, man. How you doing?
I'm doing pretty good, man. How's your Sunday been? Oh, that's right. You hurt your back.
Just went to do a simple thing to pick something up and hurt my back. So I'm still wearing the same shirt from this morning. I've been lucky to be able to move around.
Well, I'm glad we can't tell by the smell. That's what I tell I tell all my students that I train, I'm like, look, if I can smell you, you're going to know about it because I'm going to tell you. So that's just a part of the game. So the deal is we don't care what you smell like. We wish you a speedy recovery because we want to make sure our yield farming is right. We got to get that back strong so you can farm with us. So
I do have something I can show you that I can present to you because we
go ahead and present.
I'll share the screen with you here. Okay, so this is my entire screen. Can you see that?
We can see it.
All right, so what I'm showing you here is a representation of a software platform that I've been developing with my own crew that just does what I teach you how to do in the course. It just does it automatically. Now, in the course, I set you up so that everything that the money that you're earning is pretty much on autopilot. You only have to check in on it maybe once a week or once every 2 weeks. And if you're going on vacation, you can even set it up to not have to check it for a month. But since we have to trade more aggressively over here, I have written some software, because I trade for some funds and things. And the reason, but it automatically does even that little bit of work for me. And the reason I wanted to show you this today is just to show you that I was showing this to another fund manager that's probably going to invest into one of our funds. And the thing that is interesting is in the system here, it shows the profit and loss in USDT. And this is obviously a crypto's pools thing. But he was just astonished to see that every time our system automatically does a rebalance or harvests money out that we're actually making, that the P&L is always positive. He said, well, where do I see the negative profit and losses? This is only a $1,000 account here, a $2,000 account here. And I just had to tell him there is no losses. Just in this system here, you're never going to see a loss on the harvests or the when we turn around the positions over here. And the reason is because we're actually making money off everybody else's trading.
Yeah.
Now we might see some fluctuations in our balance because of the coins that we're in, but I just thought this is not novel to show you guys that the P&L is always
it's great. Now, do we all have the ability to set that up for ourselves and tie into it, or is that something that you're going to come out with later? How does that work?
Once we get this working, I will let people use this particular version. There's other automation that is available to you guys, though, through the course, and that does a very similar thing. This is just on a particular market this is one of the last markets that doesn't have any automation on it. Yeah, but it's one of the nicest, easiest markets for you guys to make money off of without any automation anyway. What I mean by making money is, 10 to 15% a month, pretty much on autopilot. I mean, you're not having to check your screen. You're not really having to do anything. But I just wanted to illustrate to everybody because I did think that this was kind of simple to understand that, hey, you're always going to be making profits, whether the underlying currencies that you're trading are going up and down. And I'll just show you something else. The underlying currencies that we're trading in this case was Popcat and Solana. And now it just happened to go up, the value of those two coins. But even whether those two coins are going up or down, we are continuing to make money off of everybody that's trading these coins, whether it's going up or down. So I don't even, it's nice that it went up because we get some boost in our equity. Other pairs that we trade in the course are Ethereum. But we don't have to depend on the price of Ethereum or any of these things to go up or down.
Because we're getting paid on the transactions of others, and because we're providing liquidity.
Correct.
Yep. So the beauty is, if anybody is interested in this, just reach out to us. And the goal is, we want to win. And you've been winning, and you've helped me to win, and you've helped our team to win. And so we just want to do more. So like I said, 10 to 15% or 12 to 15% on autopilot. What's possible if you're doing a little bit more? Is this one of your, obviously it's not your aggressive. How's your aggressive yield farming doing for you?
Aggressive, I can do about 30% a month. That requires a bit more involvement on my part, then I'll have to get in there and either, well, that's what the software is designed to try to do right now. But I have to get in there manually and do things. And I show you how to do that in the course. It's just that I really made the course for people who don't have time. Like I don't even really have time to trade all day long anymore because I have so many administrative things I have to do around the trading business that I have to be on a cruise for a whole week. I know it's rough because of the trading business, going to meet with a bunch of other hedge fund managers that have their meeting on a Caribbean cruise every couple months. So every 3 or 4 months. So I got invited to go to that. But the point, so I won't be able to trade on the cruise because it's all, I don't have internet connectivity on that cruise, but, it's limited. But the point is, I'm not worried about it. I'm still making my money while I'm gone, because in the liquidity pools, you just deposit and forget.
Yep.
You just check on it occasionally and harvest your yield. And the only time you really, it does get to be work is if you're really trying to trade it aggressively.
Yep.
And but my course is really for the average person on the street who doesn't really want to sit in front of a computer all day long. Maybe doesn't have the time, but they want to know that when they're working and they're earning their money, that they have a place where they can put their money to work for them at a serious rate. I mean, I don't know very many people are going to make a consistent 10% a month off the money that they put in, even if they're renting out houses to people, which is probably the only other business that I would consider doing that doesn't have anything to do with trading. It's just, buying properties and renting them out.
No, I agree with that. Now, when are you leaving to go out of town?
I'm going next Sunday, early next Sunday morning, and I'll be back the following week on Sunday evening. Hopefully I'll be back in time to get on the show, but I'm not sure. It just depends on
Yep.
how exhausted everybody is.
Yeah.
I got to bring my wife too and my kids on that trip. So,
well, listen, you have a great trip. I know I'll talk to you this week, and keep doing what you're doing. Don't stop. We need you.
Yeah, it's good to see you, and I'm happy that let's get together and talk tomorrow sometime. And it's good to see everybody.
All right. See you soon. You too.
All right. God bless.
Feel better. All right. Look, it's hard to describe anything different when you sit over there and you can see there's some predictable success. You control the asset. It's not a situation where we're losing, it's a situation where we're gaining. And even if the underlying asset does drop, the idea is that there's still transactions that are happening and you're still going to be making money. And then ultimately, as the cyclical nature of a lot of this stuff is, when you get into good quality pairs, you put yourself in a scenario where eventually the underlying asset will grow as well. So there's a lot to learn. I've been fascinated with learning, and this journey is one that's worth taking. So with all that said, let's go and let's see how my main man Chris is doing. What's up, buddy?
Hey, Brandon, how are you, man? Happy Sunday, everybody.
Man, happy Sunday to you too. Did you play golf this week?
I did not play golf this week. I did a bunch of club repair instead. So changed some grips, hit some balls in the simulator, but didn't play. I played a couple times last week. Just got out and played until dark. Kind of scrapped together 9 holes. So getting my reps in, making sure I still can play. So it's a work in progress.
Man, I mean, you're doing more than that. I mean, I when I was playing golf, I noticed that 3 or 4 days later, my back is killing me. And I just, the technique was wrong, the hitting hard. I mean, my divots looked like I was taking a shovel and going to work like 3 feet into the ground. It was tough. So
There's a famous saying. This old crazy golfer, he was a Canadian guy named Mo Norman, and he always talked about divots. He said, "Bacon strips, not pork chops." You're supposed to take like little disruptions of grass, not the big,
yeah,
like where you're picking it up. It's like, man, you can see the worms growing underneath. Like that's not
yeah,
good.
maintenance would be coming to me. Why you do that?
Yeah, exactly.
I'm sorry. So let's talk about the market, man. James is on assignment, so it's just you and I, and then
Okay.
we have Quentin coming on right afterwards, and we're going to be talking a little bit about it's and you've heard me talk about this before. It's this idea within crypto where they're actually paying you to mine their crypto.
Mm-hmm.
And you're doing it just through your activities. So whether you're playing golf or walking or whatever else. So I'm excited to have Quentin on the show. So
Yeah, nice.
yeah. So let's go. You're up, baby. Talk to
Yeah,
us.
sure. So markets last week, it was a highly anticipated week. Last week on Core 4, we had addressed that, the Fed is coming, whether you, as Brandon says, I love you whether you like it or not. Well, the Fed was coming whether you like it or not. And the market had an interesting day. I'm going to actually share some shots here. So this is the NASDAQ from last week. And, I actually, all in all, I'll just say this. It was a great week. I'm back up to fresh watermark highs again and again. It's the easiest thing in the world to watch the market make higher highs. Although I am spending time and energy and strategies like making sure that if something happens to the downside, that we're not getting hit too hard. But I've got some really good strategies where what I am risking to the downside is actually getting me paid for like small income plays. So I've got essentially cost-free hedges going right now, which I'm really, really happy about. Those tend to work out pretty nicely because if I'm wrong, it doesn't cost me anything. If I'm right, there's potential profit traps and things like that. But what you're looking at the screen here is the week itself was actually very, very calm. Monday was super calm. Tuesday was really calm, and I was really, really active with some strategies. I went 7 for 7 of just day trades on Monday and Tuesday combos, and then Wednesday morning, same thing. And then Wednesday, this is when all the excitement happened. And I say excitement not necessarily in a good way, but like just fat orders come into the markets in such a short amount of time. This was literally the news on Wednesday at 2 p.m. when the Fed news hit. They dropped the rates by 50 basis points. And for the rest of the day, it was just one big candle to the upside that faded. And the rest of the day, even with Powell's press conference, faded all the way back down and actually, came down to session lows. But overnight, and it was a crazy like flipperoo on the market because when the market closed, it was actually at the lows on Wednesday, but overnight the futures market just took off in a huge way. It was, it fueled the Asia session that night. The European session did really well, and by the time we looked at prices on Thursday, we had gone from this low, which was the session low from Wednesday, and we're opening up during Thursday's opening bell, and it was like 1.5 to 2+% higher on the S&P and the Nasdaq. So the futures market overnight was just killing it to the upside. This is actually the Nasdaq futures. This is the S&P futures. You can see they took out that FOMC high. This is your Dow futures right here. A little bit difficult to take out the highs, but we did actually hit all-time highs once again on the Dow as well as the S&P. And then here's the Russell, same thing, super volatile. Russell took out some recent highs as well. So we're looking at prices continuing to notch higher highs. At this point, I mean, I'm so sick of reading and hearing about, the upcoming recession and the upcoming bear market and how bad things are going to be. Look, I don't deny that at some point debt's going to be a problem. At some point, we might have like another credit crunch or a credit crisis or a fiscal crisis or liquidity issue. All that stuff can happen, and I'll be prepared for it. Certainly not blindsided by it. But man, you are a fool to think that you have to be positioning bearish right now, because I just think this market is a reflection of overall sentiment. And right now, people are getting happy because we just saw 50 basis points get cut, which means that's going to help bring down, like automatically mortgage rates there's a lot of activity in the mortgage department. So you're seeing refinancing, you're starting to see people listing again. Home sales have been down. We've been at this all-time unaffordable housing situation for easily the last, 6 to 12 months. And finally, it's a little bit of relief because although, 50 basis points from the Fed doesn't automatically translate to 50 basis points from a 30-year mortgage, it is coming lower. And so we've already seen, if I go to the 30-year mortgage here, this is actually the chart. I mean, if anybody wants to see trending in the right direction, nobody's buying houses at 7.8%. Now that we're sitting here at 6.09, those that bought at the highs are probably refinancing. Those that are waiting for the next maybe 3, 6 to 12 months are likely going to see this much, much closer to the low fives. And that's going to be my situation. I mean, I'm looking to build a house out here in Utah, and I'm hoping that rates are going to be down closer to the fives by the time we close in March or April. And I might still spend some extra money buying down my rates into the mid fours or, whatever, just because the numbers look so much better. And I'd much rather be paying towards principal than I would be paying on interest. So all these things are good. Car prices coming down, used car prices are down, inflation prices as a whole are down. Energy's been down 20+% the last 2 months. And so inflation numbers are better. If you didn't listen to the Fed on Wednesday, it really felt like a victory lap. I know that Powell's not that guy. He's not one that's very, braggadocious when it comes to his press conferences. It's very canned. And I actually took a funny screenshot of this, which totally true. This was for release at 2 p.m. Eastern time from July 31st, which is the previous Fed meeting, to September 18th. You can see it is virtually a canned statement. Now, certain things change. Yes, there's readouts or, certain lines that have changed. But for the most part, it was every Fed member except for one was in agreement to cut by 50. Now, there's a lot of narrative that goes with this 50 basis points cut. There's some interesting back and forths. This is what I thought to be cautious of. So we just cut 50 basis points. Usually when we've done that, it was 2001, 2007. Now you think about those times with cutting 50 basis points, the market clearly didn't perform well 12 months later. Okay. However, the argument is we're not in a full-blown recession. All right. We still have room to the upside for the markets. We still have room for even like price to sales and price to peak sales. We still have levels for those things to keep going. The US is not what it was 10, 15, 20 years ago. It's certainly not what it was 30, 40, 50, 60 years ago. We're not a manufacturing nation anymore. We are a tech nation. And the margins and AI and all these things that have carried us to this point of getting to these all-time highs, it's still there. And I mean, last week there's a pop on Intel, Microsoft's inking deals with energy companies. You've got like BlackRock teaming up with Nvidia. You've got all these massive things that are happening. Stocks can be bought back. You've got splits. You have mergers and acquisitions. Those that are positioned well with cash and competitive advantages will continue to dominate the landscape. Whether it's concentrated or not, market breadth has been really solid the last couple of weeks. And on the move that we saw Thursday, when we had that big push higher and the futures market ripped on Wednesday to Thursday, market breadth, I saw this, Brandon. We saw like 68 and 75 and 78% of stocks advancing on Wednesday and Thursday. Friday, we had a little bit of softness, but we still had like over 60 stocks advancing. It was like a softer day for some profit taking. But right now, it's like all I'm doing is I'm staying cautiously bullish. I'm hedging to the downside with what's cost effective. I don't want it to cost me an arm and a leg. I did that in August, and I ended up sacrificing about 0.5% of my gains in August. Last week, I had some pretty good wins. Like I said, I had seven wins on the SPX. I had a win on Alibaba, win on Palantir, win on SPY, win on silver, PayPal, crude oil futures. I also lowered my cost basis quite a bit on some core positions, Pfizer, AT&T, and FXI. So it was a good week overall. I've got no complaints. I don't think this market really cares about much of anything. Data is obviously going to be important. This week, it's pretty light from that front. If we go to the calendar here, I think the only thing that I have of noteworthiness, let's go to this week. So I don't see a lot. We do have, let's see here, 23rd. Yeah, so we have PMI numbers coming out of the Eurozone and the US on Monday. We have Australia with the potential rate decision, or they're making a rate decision, but there's going to be a pause. Stickier inflation. Bank of England decided not to cut last week, but the Fed did. Bank of Japan decided to stay the same at 0.25, but the Japanese yen was super weak last week. We have consumer confidence out of the U.S. on Tuesday. Wednesday, a light day. Thursday, Swiss National Bank looking to cut again. So, we've talked about this, but it's going to be really interesting over the next maybe 12 to 24 months to see where central banks are at. Because if you think of the bell curve of, this is where the Bank of Japan was at negative 0.1, then they went to 0, then they went to 0.1, and now they're at 0.25. So you got the Japanese yen here raising rates. Okay, that's their direction. You have every other central bank cutting rates, all of them. So the Fed's cut rates, and now it's like globally, this is a good thing. The one thing I still think that could be, one of my bigger opportunities for my portfolio would be if and when China starts to wake up a little bit, start to support the economy. I watched this video this last week on like a balance sheet recession in China. Look, the government has absolute power. They can do whatever they want. So if they want to help and stimulate real estate in China, they will. If they want to help and stimulate technology in China, they will. I don't know if they're going to. I think I'm a bit of a contrarian when I hear everything in China is uninvestable. To me, I disagree with that. I feel like there's good opportunities for, the Amazon of China, the Google of China. That's about it. I mean, Alibaba and Baidu are like my two big exposures, and then just the larger indexes. But otherwise, you've got central banks that are all cutting. Now, at some point, this whole carry trade thing does go away, because if you've got central banks cutting and you have the Bank of Japan raising, it makes the carry trade less appealing. Yeah. But what I also wonder is, will we see something where, the Japanese yen is raised this much and then they go flat, and then the Fed cuts this much, okay, or cuts this much, whatever it is, and then they stop. Yeah. So I still think right now the goal for the Fed in the next probably 12 or so months, or going out to the end of next year, the Fed is looking at being somewhere around 3.6%. They're looking to cut probably 2% from their current cash rate. So at 5.5, they're probably going to be down closer to 3.5, and that gets us much closer to the 2-year, which has always been where the Fed is essentially, if they're way above it, they're restrictive. If they're way below it, then they're underneath, and it's more deflationary. So that's where we're going. And if the Bank of Japan, which kept rates negative for over a decade, they don't have to raise rates to 1%.
Yeah.
and do it anytime soon. I mean, they could sit here at 0.25 and hold for the next 6 to 12 months, and all of a sudden you're still going to have some carry left in the market. So with risk appetite, I don't think that the Japanese yen gets really strong necessarily. I think they're in the same bed as everybody else. It's like they want to see risk appetite. The Nikkei, if the Nikkei is going to go to all-time highs, the Japanese yen's not going to get stronger. You don't see that correlation. So I'm not interested in trying to guess that the yen's going to get stronger. I hate that central bank. I hate that currency. I think it's a pain in the butt to trade as a pure forex trader that wants to trade technicals and efficiencies. It's not that. If you want to trade the Nikkei, it's an index that's likely going to try to grind higher. It just spent 34 years in a drawdown, and for the last 10 or 15 years has actually outpaced the U.S. markets to rip and be one of the best performing indexes this year. But obviously we had some drama early August 5th. But here's my Nikkei. Where's my Japanese yen and Nikkei? Right up here. So the Japanese yen, this is on a weekly chart. Here's a daily. I mean, I could see from coming off of this deleveraging right here, I could see this just spending some time, being indecisive, and life goes on. And
Yeah.
it was a one-time volatility event that we might not see for a while. You look at the Nikkei 225. I hope this is not the bottom. Like, I hope this is the only bottom, but something tells me right here, this could absolutely be a very typical reversal pattern, which is a cup and handle. You have all this crazy volatility to the downside, rips up for reversal, pulls back here. If the Nikkei breaks above, this thing's going higher, dude. And this Japanese yen's going to get weaker. And I think there's still risk appetite in the market. So I think the markets find a way to drift higher. I think the markets find a way to justify, why they're going to keep melting up with hopefully market breadth, which means more and more stocks looking better as opposed to the Mag 7 only and semiconductors only. But if that is the case, I like where we're going. I think that 590 on the S&P or 5,900 on the S&P or 6,000 on the S&P are achievable. The only thing potentially derailing that would be terrible employment news over the next few weeks, terrible inflation data over the next few weeks, which means we'd have to see the trends flip. So employment data has already been a little bit better on the unemployment side. The unemployment claims have been better for Thursdays, but we still have non-farm the first week of October coming out to, if we get through inflation, or rather the order is going to be, we get through employment, then we get through inflation, then we have an election, dude. If we have an election and the Fed's still going to cut, I mean, there's a lot of things the market, and look, I don't know, nor do I care who's president, but I think the market's only going to care if it looks like policies change. And the only way policy changes in a big way would be Donald Trump has to win and the Republicans get the Senate and the House. And all of a sudden we're talking about the trifecta in DC. That's now one color for DC.
Yeah.
And then all of a sudden policy is like, who knows? There could be tons of changes, and people could be all excited that, we're going to get rate cuts. It's like, right, but Donald Trump issues tariffs and we have crazy inflation, and we add a bunch of friction to the global economy. So I don't know if it's a win-win or if it's a lose-lose. Like I said, I'm not thinking that far out right now. I'm just trying to position for the best thing I can do for the portfolio. Is this market is pretty stoked about just grinding higher, and I do think at some point reality sets in. I don't know when. I know James and I've talked about this, like this, the market's almanac, so to speak. It's like a 2026 event. But I could see this getting kicked out there towards like Q1, Q2 of 2025. The outliers would be China, Taiwan, some type of World War III, some type of fallout, some type of Middle East conflict again that we find ourselves in. Maybe that's out there as like a black swan event. I don't know. But other than that, man, I don't think there's a lot that's going to derail the market. And I'm certainly not trying to spend and waste money and waste opportunity when the market wants to go up higher. And I'm sitting here like, it's got to go down. It doesn't make any sense. Well, that's what people have been saying for years. People have been calling out for this crash since COVID in 2020. If you've given up on gains since 4 years, you're way behind, so that's not me. I'm way more like, I get it. I'm open-minded. I'll switch positions. I maneuver the portfolio to hopefully benefit from it. And I just make sure that we're not caught blindsided by something silly. So that's where I'm at right now. But crazy week, man. It was exactly what we thought, which would be a lot of excitement on Wednesday, Thursday, Friday. And it was. And then now we look to see what the market wants to continue to run with. So we're still not done with September. September typically, historically, is a bearish month, and we might still go maybe retest what was the Fed low, or maybe we bounce around a little bit from that Labor Day sell-off. But I think we now have higher highs in the S&P, higher highs in the Dow. The Russell still has a potential catch-up trade if we can break these recent highs that we saw back in July. So I think right now the market's a little bit more excited and a little frothy with additional optimism, and that's what you're seeing reflected in the markets right now. A lot of optimism.
Let's go, buddy.
Yep.
I'm excited. All right. So let's see what we'll know next week. We'll see how things have
For sure.
turned. All right. Great job, buddy.
Thanks.
I'll talk to you in a second.
All right, cool.
So listen, as we start to learn the macros and the micros, right? And I talk about that sometimes. What does that really mean? So we see this overall macro look at where the economy is and where financial markets are going. And then we need to see how we can make money in the micros. So a lot of it has to do with, if you take a look at the journey over time, and you'll notice that Chris has been right. Being right and being with someone who inspires you that is right a lot is going to help you to become successful. So listen in, review the old work that we've done, and start seeing where these patterns are going. And then you'll understand why Chris is so happy. All right. Thank you. And so now let's see if he's on the stage. So before I bring this gentleman on, his name is Quentin Bradford, and we've had an opportunity to work together. And, he shared with me an opportunity, and you guys all know that I'm into self-custody. And what that basically means is that we don't give our money to ROI dApps out there and, promises of making us rich. And the deal is that there are ways that we can become successful. And so when we have authentic opportunities, we want to listen to them. We're in a project called Miracle Cash and More. And so that's like an investment in a company, kind of. But this is an investment as well. But it's a little different because, as Quentin, who also goes by Crypto Pays Me Daily, CPMD, right? And so what he's done is he's exposed us to a way that we can make money doing the things that we do every day, as long as we have a smartwatch. And so that interests me, because we're investing in a tool for ourselves. And then as we use that tool, then we get paid from it. And as we help the community to grow, it's not built on us bringing in others for our own financial benefit directly. It indirectly benefits us, because as the community grows and they build, then the value of the token builds. Totally different, totally out there, and I love it. It's a great opportunity for at least my journey. So let me bring him on to the stage. What's up, buddy?
What's going on? What's going on? Can you hear me?
We can hear you great.
Perfect.
I want crypto to pay me too. So if I can be CPMD also, can I put the also back there?
Man, they got a bunch of them out there right now. I've seen some Crypto Pays Me all day. Crypto Pays Me every day. Like, some people have, they've gotten creative with it.
Well, you're CPMD OG.
OG, yeah, there it is. Absolutely.
So thank you for joining the show and
no
really
problem.
coming in and talking about really what this is. I mean, it's good for everybody, because I've noticed that, you and I talked when I first got involved in it. And you told me about this a long time ago, but I didn't see it then. I see it now because I'm active. Right. And so I'm like, if I'm gonna wear a smartwatch, I might as well work on getting paid to wear that smartwatch.
Right.
That's number one. Number two, when you first told me about it, I was like, oh, well, if this thing is only $1 or whatever we talked about that one time, or that it was coming out at, you couldn't really see the vision, because unless you was making 100 of these MQTs or 500 a day, maybe I didn't see how valuable it was. And then boom, it shoots up to $110 in like a month, right? Or a month and a week or two. And then it starts to settle back down, and it's got like authentic reasons why it settled back down, as it's trying to build the community. So, give us an overview on what is Get Fit Mining and MoveQuest.
Well, Get Fit Mining is kind of something that came about a little bit over, I'd say maybe 3.5 years ago. It was created. It was a move to earn platform that basically used your proof of physical activity as a way to submit that every day to the blockchain to receive a token reward. And so it incentivized people to go out there and just be active. Like we're active every day already anyways, because no matter what, I mean, you're doing something, you're sleeping, you're breathing, you're eating, you're, going to work, you're doing exercises, going to the gym, whatever it is that you're doing, you're being active in some kind of way. So it just kind of made sense. When we look at a lot of these projects that, I know I've been a part of, you've been a part of, and many other people have been a part of, they don't really have real purpose or real utility. And it took going through a lot of those projects that didn't work to really understand, whenever you came across one that actually had some real utility, how it made sense and why it could work. And there's still a lot of people out that don't believe that this concept, is going to work. They don't think it's going to last long and all these different things. But, one of the things is that I've kind of learned is that when you build something the right way with the right intent, because everybody out here, I mean, people love crypto, but everyone is not about community or about helping others when it comes to crypto. At the end of the day, you got to pay your own bills, right? So a lot of people look out for themselves, but there are some people out here that really understand blockchain, really understand decentralization, and they know how to put these projects together. And this is one of those projects that just was put together the right way. And so over the first 3 years of this project, it was really a trial period of really trying to figure out and tune it to where this thing could really run and have some sustainability. Because what we see in a lot of these projects, people get in early, they pump to these high prices, they dump back down to a low price, and everybody's just sitting there looking like, hey, who's the next, where's the next group of people that's going to come pump it back up so we can be the next ones to cash out. That we've seen that just doesn't work.
Doesn't work
over a long period of time, right? And a lot of people have been so scarred and beat up from those types of projects that now, we've seen people come into this project, which has been now fine-tuned. Like I said, over the first 3 years, it was kind of just figuring it out. They relaunched on another blockchain, not to leave the other blockchain behind, because a lot of people just thought, well, they're getting rid of the Binance chain and they're just getting people to put more money in this other chain. And it's just what we typically see in projects. They just find another way to bring more money in, but it's two completely different deals, two completely. And so now that they have the blueprint on Avalanche that's working, that's paying people an average of $79 a day. They've paid out over $4 million to the community in the first 60 days. Now they have that blueprint. They can go back over to Binance and all these other chains that they're going to introduce, and they can replicate themselves.
Yeah,
they can replicate it, right? And so one of the big things that's different about this particular project is, number one, is decentralized, right? We're so used to these ROIs that give us 1% a day, 0.5%, 2%, but there's always somebody on the backside that has to press that button for you to get that withdrawal. And we have to trust that person and that they're going to continue doing the right things. And typically, as it goes on and on, the greed kicks in, or there's not enough money coming in, or they don't have any real sustainable, way to earn from the backside. Well, that button stops getting pushed, and then you see your assets and your money go off with somebody who, runs off with all the money. Well, that's the one thing that we don't have to deal with here. The contract that has all of the liquidity for this project, it's renounced. There are no options to go in there and pull the liquidity and rug pull like most of these other projects are doing. And
how do you know that Lynette doesn't have the key C phrases? How do you know that?
Well, there's things that you can verify. There's things that you can verify in the blockchain that will tell you she does have some control in this project, because I like to use the analogy of a child. If you have your kid that you're teaching how to ride a bike, right? You kind of hold on to them until they can get it down and pedal. And then once they can kind of go on their own, then you let them go and they can run. And right now, she still has the reins. She still does have some control, but the money that's behind the token and liquidity, she does not have control. That is all on Uniswap. You can go and look in the blockchain. You can see that contract, it has been renounced. Now, to your point, there are going to be audits that are done on this project, but we have to wait till everything is put together. You know, we're going through the whole rebrand. It's going to move from GetFit to now it's going to be called MoveQuest. So they've already got the app developed. They've already got the branding. They're just, you know, excuse me, finishing up the last touches on that. And there's going to be a big event in Vegas in November, which has not been announced yet. It's coming. And that's going to be the official real relaunch and rebrand. And then once that happens and everything is running the way that it needs, we're going to see those audits being done, because those audits are a nice, you know, 25, 30K sometimes to do those audits. And the last thing you want to do is just do an audit, make a change to the, you know, to the ecosystem, and then have to go back and redo it again. So yeah, basically right now what we have is something that is just working. All right. It's working for individuals.
And so, you know, let's just go over kind of how it works. So basically, just like with Bitcoin has a complex algorithm that it's trying to solve. It's a math problem that it's trying to solve. And in the process of solving this, you know, incredibly long, detailed math problem, then whoever solves it, or whatever computer solves it, there's a release of Bitcoin to them, right? However small the fraction is at this particular point.
Right.
And so in our case here with GetFit Mining or MoveQuest, instead of there being a complex mathematical formula that's being solved to give the miner the reward actually for our activity is what actually creates the release of the token.
Right.
And so that's number one. And so there are no restrictions on when you can take out your money.
No.
So, you know, if, you know, right now, because I haven't been really doing a lot, I'm only getting 0.26 MoveQuest a day, or almost 0.3. So if the token is $60, I'm getting almost 15 to 18 bucks a day. But there are people out here that are getting 500 a day, right? And so they're getting it because, number one, they're more active. They're getting their steps in. They're sleeping, because the app tracks all of this, calories burned. So now what happens is that if you really are buying into your health, instead of you going to pay like a membership at a gym where every month you're paying the membership, you actually are getting paid to do this activity. And it's just a higher level of motivation that I feel like I've had. And I sprained my back, ironically enough, because I was getting it in too much. I was trying to get 2-3 of these tokens a day. But the reality is right now it's $60 or $62 or $69 or whatever it is right now. And what happens is that you buy these Lennies, which are basically miners, which are basically like software computers that you're buying, as opposed to having to build a rig in your home, in your backyard. You now are buying this, and then it's mining the token for you when you submit on a daily basis. Did I get that right?
Yep. That's basics. Yeah, absolutely.
That's what it is. And so then when it's released and you have it, there's a value because of the tokenomics and the way the supply and demand work. But that's the community of miners. But at some point, the regular world is going to then want to own and buy the token on a mass level.
It's happening now. I mean, we have a lot of people that are not in this project that are buying the token. I had someone ask me today, hey, I just want to buy some of the token. You know, I believe in the project. I'm not really, you know, super interested in, you know, trying to work out and do all this other stuff, which, I mean, that's their prerogative, but they just wanted to buy the token. So I sent them the token contract. They can go look at it. They can go and buy it. And some people are not attached to the ecosystem in any kind of way.
I love that, because, you know, when Bitcoin to me became Bitcoin because nobody owned it. It's the people's coin. Every other coin, including MoveQuest and GetFit Mining, is owned by a company that's in control. So what I like about this is that Lynette is trying to mirror the Bitcoin concept, renounce her authority over the project slowly. And then once she does, then it's kind of like our community. We're building value for this. So if I wanted to pay you for something, I could pay you with the MoveQuest token, just like I could pay you with Bitcoin or Ethereum.
Yeah, two things there. And Lynette will say this real quickly. She's like, "We're not a company." She'll tell you that we're not a company. It is different because when you look at tokens like Bitcoin or Ethereum, these are their own blockchains, right? MQT is not necessarily their own. They're not their own chain, right? They're just on chain with on the Avalanche blockchain, and their token is something that can be moved fairly easily into the stable token USDT, right? So it is a little bit different, but they have based their tokenomics the same as Bitcoin. The one thing that I will say that I really like about this versus Bitcoin, and this even cost me to sell all my Bitcoin, being in this project, but that was the fact that we don't have the big, huge whales that you see in Bitcoin. Like we saw Sailor the other day, he bought 7,000 or 8,000 Bitcoin the other day. He holds, I'm not even sure, I think it's 300,000 or so Bitcoin. When you have somebody with that type of control over that amount of the supply, they can manipulate the market.
Sure.
And they can keep the price of the token from going up, which is what I think we're seeing right now with Bitcoin. I think we're seeing a lot of that price being held down because the institutions and the big whales, they want your Bitcoin. They want more of it. They want to accumulate as much of it as they can before they send this market off to 100K, 150K, and then so on and so on. I think it'll happen in time, but that opportunity for me and you who can't go out there and buy 1,000 Bitcoin, right? Where's the real big opportunity there? So when you have a project like this, like MoveQuest, that comes along, it gives us that opportunity to accumulate. This is not the pump and dump where you get rich in 60 days and then you're gone. There are some people that are playing that game.
They are.
They're playing that game inside of here because they've been burned enough to say, look, I don't care about the community. I'm about me. And we see a lot of people that are cashing out.
And that goes to the whole concept of decentralization. Do what you want to do.
That's it. You got the option.
and here's the thing. I mean, if people come in, you can get in this project for less than $100 and get a miner and kind of get started. And just like me, I'm growing over time, and I'll add, and get my miners so that I can max out. Because right now, let's say I'm doing $20 a day for the activity. If I would have maxed out, that probably would be somewhere around $60 to $80 a day. Right.
And if you had the strongest mining power,
yes,
that could 3, 4, 5 exit from there,
Exactly.
So,
exactly. So this has been great, man. What I want to do is, for our communities watching and growing and learning and stuff, I'd like to bring you back on because we could talk about the price, talk about the updates, because we're trying to build a community with this, right? So you're only getting, like, it takes an hour to get somebody actually up and running, right? So us being willing to do that is because we recognize the more people that are involved with this, the better it is for all of us.
Absolutely.
Right. And they're creating the liquidity from the fees that are being generated from this. And they're also creating liquidity from people that are, trading the token, and they're creating liquidity from, the relationships of the community that's built. So, hopefully you're willing to come back on the show.
Yeah, absolutely. Yeah, because I mean, there are some things that are really unique too that we really didn't touch on, the liquidity provision, and which helps sustain the ecosystem. That's something we've never seen in a project, something that's built in the contract to help sustain the ecosystem. So there's some really cool, unique things about it. I mean, I've seen a lot in my day, and this without a doubt has been the best project that I've come across. So excited about it. And whenever you're ready, let me know. We can get back on and we can talk.
Again, I'm into, as you know, we talk all the time, but I'm into self-custody. And so I believe that this actually kind of qualifies as a self-custody quasi kind of approach, because you're buying something, like you're buying a lawnmower, and then that's the tool that you're using. You know, you're buying a car, and that's the tool. So it's not like you're taking the money and investing in something. The actual efforts that we're doing in terms of the activity is what's actually creating the return on investment, if you want to look at it like
Right.
money you're getting back from the miners. So I like the twist. I like where we're going with it. And I like the growth, and I also like the fact that you're taking the time out to, you know, be a leader in this community and share it with others. So thank you.
Sure thing.
All right, man. So I'll talk to you later on today or tomorrow. We might have to top me up a little bit with this and get me some more mining power. You got me motivated.
Yeah, we got the 8th slot now, so they opened up the 8th slot this weekend. So we can add that 8th miner. So yeah,
let's do it.
Absolutely.
All right, buddy.
All right.
Thank you so much. I'll talk to you. Listen, guys, the goal of all of this is to present you with a journey that's working and makes sense. And so as we're all learning in this space, the goal is to be responsible. And so you don't want to put all of your eggs in one basket, and you want to learn and earn at the same time. And so at Core 4, that's what our plan is. And we don't want to take too much of your time and your efforts and your energy. We just want to share with you our journey. And if it matches up with you, what you're interested in, and if it really makes sense, then we're here to support you. So love you, whether you like it or not. Chris made me say it. Talk to you later. Good night.